Look, apologies for being a couple of minutes late there. Sorry, it was a bit of a slow lag getting online today. But no, look, I really appreciate the time to have a conversation. We discussed looking at ways in which we can assist our clients with cash flow at our recent conference last month, and so I see this as being a really accessible tool and resource to use to help our clients, especially at these cash flow restricted periods now and into the future as well.
Fantastic. Thanks, Craig. So what I'll do, I've got a few slides to run through just out promptly talking, but please feel free if you've got any questions, need clarification on anything, do feel free to interject, pop up your hand, or most of you will be on mute, but you can unmute yourself through from there. So once again, thanks to Craig for the invite today and everyone for coming along. We think there's a lot of, tie-in with that we're effectively dealing with the same client base in a lot of cases in an area that's causing quite a significant, few issues in the market. I also like to welcome Marjorie's hiding one of the names up there, so just a new starter with us today to help support our onboarding team. So welcome aboard. There we go. Hi, Margaret.
Hi.
Okay, so what I'll do is I'll share my screen now and just start going. I tend to talk a little bit. So again, please feel free to reach out to any questions. Hopefully Craig can share my details at the end. So if you do have any questions following, feel free to reach out there as well. I won't just a second. Okay, Craig, can you just let me know, has that come through okay?
Yes, indeed, I can see that. Co-branded.
Yep. Fantastic. Okay. No, that's good. So again, welcome to Small Business Accounting. So we're FundTap. We're a Nelson-based business that operates throughout New Zealand and Australia, supporting small and medium business cash flow. So I'm Shane Laurence, Head of Growth, so do everything out the front end. So I thought we'd talk a little bit today around, the current economic environment and some of the issues that small businesses are facing, give you an idea of what we do, how it works, and how we fit into that market. And I know whilst a lot of you will be moving into the compliance to advisory piece, just a couple of tips that we've found really useful with the bookkeepers and accountants that we're working with to help with those first conversations and transitions. I'll run through a couple of the common queries that we do get. And again, if you need clarification on anything, do feel free to reach out at the time. So I'd like to start with, it's a quote I come across a while ago, and while I couldn't find who actually said it, I felt it was quite applicable to most of the clients that we're dealing with. So revenue is vanity, profit is sanity, and cash is the reality. And we're finding that more and more with a lot of the business owners that we're dealing with. So as you'd be aware, there's some quite significant challenges in the market for your small and medium businesses with regards to managing their cash flow. If we look at some of the, the high level stats that are coming through, is that in New Zealand, there's $5.3 billion worth of bank lending to the SME market that's specifically backed off the family home. It's about $2.2 billion of that was due to rollover and refix this year, and over $2 billion next year. And the average increase is estimated to be about 2.7% percentage points on the interest that a business is paying. Again, if we look at that small and medium business market, recent studies show that 55% of them are now finding it harder to get finance from banks or your traditional finance institutions. And specifically with banks, that 90% of all small business lending is backed off the family home. I guess if we drill down even more, which probably relates more to the businesses you're dealing with and we're dealing with, is businesses that have been operating for less than 5 years, 69% of them are finding it harder to gain finance traditionally than they have previously. And if we look across the, the property-backed SME lending that is coming up for rate renewal either this year or next year, with an average 2.7% increase, it's over $113 million per year out of the back pockets of small business owners in New Zealand. So that in itself is having a massive impact on cash flow, which we're only just starting to see sort of the first ramifications of. So our perspective at the moment is that cash flow is probably the single biggest challenge facing small and medium enterprises today. It's the number one reason for business failure. Again, another recent stat, about 83% of all business failures directly attributable to a lack of cash flow. If we look at the wider sort of macroeconomic market, as I mentioned, you'd be aware interest rates are going up. We've had generational inflation, and we've seen a lot of larger businesses dictating terms of trade to smaller businesses, so your 45 and 60-day payment terms. And when you're looking at small business, you would have seen the stats before. They are finding it harder, especially the newer ones, to gain funding through banks or the traditional institutions. So small businesses are relatively limited these days. And what we're seeing is there's a lot of operators, for example, BizCap and Prosper, that are filling the gaps. And while they do have their place, we're seeing that quite often you're getting a short-term hole that's been filled with a longer-term obligation. So I can't pay my wages next week, but I'm then making repayments over a 12-month period. So there's relatively limited options for those smaller SME businesses. And I'll just, Cassandra's just joining. So again, I guess if we turn the focus a little back to us and what we do and how that fits into the market. So we're a small business cash flow provider. We provide a unique form of invoice or debtor finance with a lot of the fish hooks removed. So we provide what we call on-demand finance. And basically what that boils down to is there's a fee when you fund, but not when you don't. So there's no establishment costs, monthly service charges, lock-in contracts, anything like that. We're also what they term a private or a non-disclosed facility. So traditionally in the invoice or debtor finance market, we would have to be doing due diligence on our clients. They would be making payment to us, and then we'd release funds to the client. There's a couple of main risks in that. Obviously, if the client's 2 days late paying, you've got a third party on the phone chasing them down for payment, and it's not always good for the relationship there. The other one is you're tied specifically to all of the client's invoices or possibly your entire debtor ledger. So with us private, you can pick and choose what invoices you're funding and when based on the actual cash flow requirements at the time. So possibly $10,000 this month, it may be $3,000 in 6 months' time, no holding costs, and you're not paying for money you don't need. We're simple. So we've taken I guess, an automated route where possible. So we sync with the 4 major accounting software platforms, being Xero, MYOB, QuickBooks, and Reckon. This helps streamline the customer, funding request process, but also allows us to use high-level read-only financial information for help in the approval process. So we're not chasing end-of-year tax returns, updated management accounts, that side of things. We're API'd into all of the major credit reporting and property agencies within New Zealand and Australia. And so that allows us to be quick. What we're finding is that in an ideal world, a small business owner would have done a cash flow forecast. They can see there's a hole coming out 2 months ahead, and they're looking for an option for when that occurs. But in reality, what we're seeing is that 99% of cases, the house is already on fire, and we're looking for some water just to put it out. So, I've woken up one day, I need wages to pay next week, but I'm not getting paid to the 20th. What can I do? So we're able to provide really quick turnaround and an ongoing basis. So long as the invoice is submitted by about 3 o'clock in the afternoon, it's same day funding. We've recently crunched the stats around our client base. What we've seen is an average client has increased their revenue by 54% over the last 2 years. And whilst we can't claim credit for all of that, we'd like to think that providing simple, hassle-free, quick access to cash when a business needs it the most has helped businesses along that growth path. And I'll welcome Debbie. So on-demand finance, what is it? So it's invoice finance, but reimagined specifically for small business. Finance when needed, no costs when not. So that's the on-demand piece. And we've got no ongoing contract establishment costs or hidden fees. As I mentioned, there's a private facility, so there's no changing the way your client invoices or receives payment from their clients. Online and automated, quick turnaround. So generally someone can apply in 10 minutes, go through the entire process. Unless there's complicated ownership structures, that sort of things, generally we can turn around in a day. And ongoing funding, as I mentioned before, if an invoice is submitted with us by about 3 o'clock in the afternoon, we can have same day funding as well. Also seen a lot of success at the moment, especially in our advisor space, around our obligation-free pre-approval. So this is for clients. You'll obviously have clients that are coming to you with immediate needs. You may have other clients that are in traditionally cash flow lumpy businesses or going through a bit of a growth curve where they've picked up new contracts and they need to try and source materials and labour and that sort of thing. So the costs are going out the door before they're coming back in. So we're happy to run through the process with a client, have a facility for same day cash flow available. If they never draw down on it, there's never any cost or obligation for them, but they've got that same day cash flow if needed. Actually had this brought up by a finance broker a little while ago. Obviously, we're a new type of model and comparing us to the traditional invoice debtor financing and term loan type funding that a lot of businesses are using at the moment. So he said the traditional model is a bit more like getting married. So generally you have to be operating for quite a long time. Once you're in there, you're locked in for a while. Someone else generally has control of your money and it's quite difficult to leave. He said that for FundTap, we're a bit more like friends with benefits. So it's pretty easy to get into. The relationship's really important. All of the good times, none of the commitment, and you can walk away at any stage without any ongoing commitments. Whilst we are a finance company and we do operate on finance, what we do and how we do it, our relationships with our clients and our partners is paramount to the growth and success we've seen so far. So we place a massive emphasis on making sure that communication is good and positive at all stages. And specifically for a finance type company, we're really proud of what our clients have had to say about us in the review space. So who do we work with? And I guess this is really big overlap between SBA and FundTap comes into play. Because we are working with live financial information, it allows us to get in the door a lot earlier than most other providers. So generally, we're looking for a minimum turnover of about $5,000 per month. We say we're looking for 3 months of trading activity, but generally what we're looking for is some history of invoices going out and being repaid. So for some businesses, that might be 6 weeks, other businesses 4 or 5 months. Our facility runs up to $150,000 at any given time, but we've got no minimum invoice value that we'll work with. So quite often we're working with those small and micro businesses. We'll have people submit an $800 invoice, possibly because they've got their annual ACC bill come through or want to take the family away for the weekend or whatever it is. So we're able to work with no obligations, etc., in that small to medium business space. How does it work for you guys? I guess what it does is we're another tool in your toolkit. So it gives you the ability with the right fit, right situation, is that possibly, hey, we've got a relationship with these guys. Here's something that might actually help you on your growth or help you pay your wages next week. So it's around adding value to the support services that you can offer through to your clients. Again, I put support client success, but go back to we like to think we're a force for good. That's shown in those growth stats within our clients. And quite often there's a lot of things limiting businesses specifically around cash flow. And so it's providing a tool for them to move through from there. We've got a custom URL effectively that you can use for clients to sign up. So we're very happy however you want to operate. Some of our partners prefer to work on a very hands-on basis and walk their clients through the process. Others just want to send off a URL. We're happy to do all the heavy lifting ourselves. The custom URL will attach them to you specifically for ongoing reporting and rebate and discount purposes there as well. Again, I'm unsure, I guess, of the specific skill set or where you sit in your own practice at the moment. Spoke at a couple of bookkeeping conferences recently, and a lot of the conversations having with accountants is around that, I guess there's wider industry pressure around moving from that compliance to advisory piece. And there does seem to be some hesitation around, am I ready for advisory? Do I have this specific skill set? So At this stage, I think there's a couple of really easy steps you can take to start that transition that don't need, I guess, a lot of existing knowledge in there. So at this stage, I normally tell a story around my plumber, Mike. So Mike Allen here in Nelson. So Mike, he's comes around and does our house. He communicates well, does a good job, fixes the tap, and charges a reasonable price. So it gets to a stage now where if someone asks me if I know a plumber, I'll say, go give Mike a call. And actually, it's got to a stage now, if I walk past a leaking tap, I'll say, oh, you need to give Mike a call, plumber. So I don't know specifically how to fix the tap or make the toilet fill up, but I know someone who does. And so it's a really good first step in actually just you're working on the compliance, identifying a problem. You don't need to know the solution yourself, but it's around building that network of people that you trust who offer a good service who do, and providing the recommendation on from there. So it's quite an easy first step to go through. Second step, a real massive advocate for a question-led approach. There's one thing I've found about small and medium business owners, they're generally on the tools, they're managing the accounts, they're there day to day. There's nothing they love more than telling you how they've faced the challenge and how they've overcome it. So depending on what your schedule or your flow is with your clients, whether you're sitting down on a monthly, quarterly, annual basis, I guess there's identifying opportunities and saying, hey, Sarah, I see you picked up this large contract in December. How did you manage ordering the materials for that? And they'll tell you exactly how they went through that process, the issue they come across, and that might be an opportunity to build another relationship, another thing on your toolkit. I guess the follow-on step from that is around, you're talking to John, and John says, oh, I've got, I've picked up this massive contract with Fonterra. They're on 60-day payment terms, but I need to pay wages. I've got my GST bill coming up. What do I do? And then it's at that stage saying, hey, I was actually having a chat with Sarah and she uses these guys. So you'll start to, I guess, in an iterative process around building a support network of key services that can help your clients succeed. And then, your knowledge starts to move through from there. Where's the opportunity, I guess? So for us, it's small to medium business cash flow. What we're finding is that it's not necessarily a cash flow issue as it is a cash flow timing issue. So it's just that interchange in time between money going out the door and money coming back in. So it's not always inherently a cash flow, systemic issue there. And we're also seeing a lot in the growth space. So this is businesses, there's mum and pop, 2 or 3 guys picking up a large contract after they've been operating for a year. And it's going through that stage. So generally, if it's a profitable contract, the cash flow always catches up, but it's just getting through those first few months of delayed payment terms. So we're seeing a lot in that space. So I'll go back to what they say, I guess, is the most successful upsell pitch of all time. Would you like fries with that? So I guess the possibility is, as you're going through with your clients, discussing issues, do you want a same-day cash flow safety net available? If you never draw down, there's never any cost. So there's the opportunity to be proactive and work with other partners, not just us, but across the spectrum, to add value to your clients' businesses so they can focus on what they do best. If we look at some common queries we come across quite often in the advisor space, ongoing cost, it's completely on demand. Fee when you fund, not when you don't. So we have some cases a client will use us once and never again. Others use us 10 times a year. On average, our clients will use us about 4 times a year, which ties in generally with the overall stats around when businesses are cash flow negative. So they can sort of dip in and dip out as required. Industry exclusions, we've got no industry exclusions. So while we are invoice or debtor financier, our actual model is based on future promise of payment. So any business that issues invoices and has possible timing issues there, we do a lot of trades and construction, manufacturing, recruitment, import, export, business to business services. So it's web designers, engineers, architects, that side of things. But we also, I guess, deal in some other spaces where people are waiting for payment. So there might be We've got a few real estate agents on board waiting for their commission to come through. We've got some farmers who, waiting for their Fonterra payment to come through. So we can be relatively flexible within that. And if you've got any ideas or thoughts, or here's a possible situation, can you deal with it? We'd welcome any phone calls and a discussion to see whether we can. Obviously, the pre-approval process. So I guess that's setting your clients up for future success. So having that safety net available, if they never need it, fantastic, no cost or obligation involved. Private non-disclosed, as I mentioned before, our clients will never know we exist. So it's, I guess, from a reputational standpoint, that satisfies a lot of clients' needs, but it also gives them the flexibility to pick and choose which invoices they're funding and when, based on the actual cash flow requirements at the time. With regards to incentives, one query I got back from one of your team members was, will it cost my client more coming through from us? So where a number of other providers out there will charge an additional establishment fee if it's coming through from the advisor network to effectively cover the the amounts, the rebates coming back through to you. So all of our rebates come specifically out of our margin. There's no additional cost to your client. And in fact, if they come through the SBA network, they'll receive a $100 discount on their first funding. And yourself as the referrer is entitled to a $300 upfront rebate there as well. One of the other questions I got back from the team was around Smart AR and how that fits in and the differences with us. So there's a couple of key differences there. So Smart AR obviously works with accountants and lawyers, pays the bill up front, and then works specifically with the client as it goes on. So we do have a number of bookkeepers and accountants that use FundTap for their own business, but primarily using it to help support their client success. So we can work across both sides. The other major difference is that with FundTap, you are completely in control of when you receive the funds, on what invoice and what fees you're paying. So with a system like Smart AR, you are still reliant on your clients signing up to it. And so while it's likely to bring forward some cash flow, it is out of your control somewhat. So that's me getting older, still playing rugby. There's my two sons. I know it's been a lot of me just talking at the moment, but hopefully that has provided a bit of an overview around what we do, where we fit into the market, possible opportunities within your own client base, and possibly how to start those conversations. Do you have any questions at this stage? Nothing at the moment. What I'll do is I'll share my screen again quickly, and I'll just show you specifically what the system looks like from a client perspective. So has that come through there? Can someone give me a thumbs up or a yep? Fantastic.
Yep, we can see that.
Right. So for this, for each of the SBA franchisors or franchisees, sorry, we can create a custom landing page specifically to your business. So if any of your clients or contacts land on this page, there is a 30-day tracking cookie on it. So if they sign up independently within 30 days, then for reporting, rebates, etc., it's tied specifically to your business there. From a client side, if they're looking specifically at funding, as I mentioned, we connect with all the four major forms of accounting software, Xero being the main one there. So as an example, if I was looking for $10,000 worth of funding today, it's a matter of just picking and choosing which invoices I'd like to fund. So we'll fund 90% of an invoice value up to the facility limit. One thing we have done when designing the system is to take into account the time-poor business owner, and so I've tried to automate things where possible. On the funded screen, you'll see the repayment dates. So a direct debit will be set up from the client's bank account on the repayment date, which is based on the invoice due date that's raised in the accounting software. We understand not everyone pays on time, and some people do pay early. So there is some flexibility within the system for the client to manage that. As an example, Green Associates decides they're paying this Friday, or the business comes into cash some early, they can reschedule that repayment date, and their fees will automatically reduce based on the amount of days outstanding. From the other perspective, Able Supplies, we know they've given us a call, said they're not paying until the following Tuesday. So the client can push the direct debit date back up to 5 days themselves, no questions asked. Anything beyond 5 days, communication is just the key thing for us. So it's saying, hey, home services have given us a call. They can't actually pay us till the 4th of January because they're waiting for their staged payment through from XYZ. So within reason, we can work with that as well. Any questions or thoughts? No? Fantastic. Thanks for your time. I know it's just been a lot of me talking.
Sorry, Shane.
Yeah, Lisa.
Just this one question. So if we're funding, say, that 10 grand,
Yes.
and that would come into the client's bank account, okay, and then their customers obviously pay them on time, and you,
Yep.
and then you come in and take, say, the 10 grand back out. So where does the cost come in? So how does, so they get $100 discount. So what's the fee structure? Did I miss that slide? So is it
Yep,
a
no, that's right.
percentage
So
of what you're funding?
Yeah, that's okay. So the fees generally work in between about 4 and 6% of invoice value, depending on how long it's outstanding for. I'll show you my screen again quickly and just.
So on that, let's say they're borrowing it for 10 days. So if it's, say, 6%, it'd be 6% of the 10 grand, then
Yeah,
they get $100 off. So is it a, yeah, how do we account for that when, like, because obviously we're going to see in the debtors that it's been receipted and then it becomes this cost. So just where do we get the breakdown? Like, because it's just creating more bookkeeping.
Yep, no,
I
that's
suppose,
okay.
for us.
A couple of different questions there, and I'll run through those for you. So as an example, if I use use your figures there, so $10,000. So this is just on the homepage.
Okay.
How much can I borrow? So we're very transparent with our pricing because we've only got the single fee. And each time a client submits an invoice, they will get a quote before they submit it to us, based on the invoice amount and the time outstanding on the invoice. So we're very transparent with that, so they know exactly what they're getting in for. So, for example, invoice amounts $10,000 for 4 weeks. So in that case, we fund 90% of the invoice value up to the facility limit. So we'd fund $9,000.
Yep.
And then when the client gets repaid their $10,000, we direct debit the 515, obviously less the 100 from there. So we've designed it so that there is, we're not funding 10,000 and taking out 10,400, if that makes sense.
Yep.
So you can just get an estimate of the fees through from there. With regards to your other question, so we do, with our links with accounting software, it is high-level read-only info, so P&L, balance sheet, accounts receivable, accounts payable, and the executive summary. There is one exception to that, but the client has to opt in through the application process. So for Xero, and we can do this any stage, we can automatically write back the FundTap transactions. So it saves your end of month reconciliation, that side of things. So it will, $10,000 will go into the bank account and as a current liability. And then when that's repaid, it will automatically spit out the FundTap fees into its own expense code, or you can add it to an existing interest costs expense code or that side of things. So again, we've tried to make it as easy as possible.
Yeah. Okay. Cool. All right. Thank you.
Does that answer your questions?
Yep. No, that does. Good. Thank you.
Fantastic. And is there anything else from anyone else?
Everybody must be thinking of their Christmas bubbles and Christmas cake.
Yeah, absolutely. And what we do find is December is traditionally mad for us. There's annual leave entitlements. There's people, working for, your Downers or your Fulton Hogan that sort of slip out of a pay cycle sometimes, so that, it's 2 months between coming through. So if you do have any clients you come in across, do feel free to get in touch. As I mentioned, we're more than happy to run through the process of no cost or obligation for your clients. Once I've done a little bit of tidying up at the start, I'll send the link for the webinar through to Craig. And if you're happy to share my details out, more than happy to take any questions or thoughts moving forward. Fantastic. Okay. Thanks for your time. If we don't cross paths again, enjoy the Christmas break. It's been one of those years. And no doubt we'll talk again soon.
Fantastic. Thank you very much, Shane. Really appreciate it.
Cheers.
Thank you.
Bye.
Yes, bye.
Thank you. Bye.